Hello and welcome everybody to the Crypto Mining Show, your one-stop shop for all things cryptocurrency related from the perspective of a cryptocurrency miner. I go by Blind Run on the internet and Matthew in real life. And it is a bloodbath out there this week as the SEC targets cryptocurrency and cryptocurrency exchanges across the board, unable to really decide on what they think of anything outside of Bitcoin as far as if it's a security or a commodity. And this is also translating into what is shaping up to be a resurgence of Bitcoin dominance. Now, back in the day, Bitcoin dominance was like 90%. And over the past bull run, it fell to like 30 to 40%, but now we're starting to get back over 50% for Bitcoin dominance. And that is going to be an interesting topic, especially as we start moving into the next bull run. The SEC has asked for emergency orders to freeze Binance US assets. Pretty crazy stuff. An Australian bank is slated to block some payments to crypto exchanges. Crypto.com is going to be suspending US institutional exchanging. And we have obviously the Bitcoin dominance that we referenced earlier. Hut 8 says repairs to damaged crypto mining equipment are taking longer than expected if you're looking for a new market to get into. And then we have some new hardware information coming out. We have a new Intel Arc Pro A60 GPU that looks pretty amazing. We have the new partnership between Flux and Octominer coming out with some beasts of a system that I am super excited to take a look at. And we have new firmware for the Ospreys as far as the firmware for their new bit streams for Ironfish that's coming out. Yes, that does mean subsequently Team Red Miner for FPGA is supporting Ironfish now. I haven't gotten around to getting my FPGA up onto that. We'll talk about that at the end. I think for the Q&A a little bit about what's going on in my life. I'm a little bit behind on all of this and probably will be for a little bit longer. I'll explain why. And then we have the new Rigel miner version 1.5.2, and we'll talk about cryptocurrency profitability, mining profitability on both GPUs and ASICs, as well as FPGAs. All of them a little bit down right now. Let's go ahead and take a look at the ad, and then we'll hop into the show. Today's sponsor is BT Miners. BT Miners has been a long-time sponsor of the channel and a proven reliable source for ASIC miners. If you're looking to purchase ASIC hardware from Bitcoin to Dogecoin miners, they are available for purchase on bt-miners.com. BT Miners is a trusted source by both ASICminervalue.com and CryptoMiner.com. Follow the affiliate link in the description and tell them SOT sent you to support the channel. And welcome back. So let's hop into the first topic for today, coming from CNBC themselves. SEC asked for emergency order to freeze Binance US assets anywhere in the world. The SEC asked a Washington, D.C. federal judge to freeze the assets of Binance's U.S. subsidiary, alleging that the company and its founder, Changpeng Zhao, held a disregard for U.S. law. The emergency order was filed late Tuesday night and would also force the repatriation of fiat and crypto asset deposited. Why am I blanking? Is this spelled correctly? Hold on. All right. I feel dumb today. Let's get this. It's the process of returning a thing. No, I needed pronunciation. That's what I need. Pronunciation. Oh man, I should have taken my lion's mane today. This is rough. This is rough, boys. Hold on. Repatriation. What is this? Repatriation or repatriation. There we go. A fiat and crypto asset deposited, held, traded, and or accrued by customers on the Binance.us asset trading platform. The Securities and Exchange Commission filed an emergency motion in Washington, D.C. federal court Tuesday evening, asking a judge to freeze the assets of Binance's U.S. platform and repatriate both fiat currency and crypto held by the service's customers. The freezing order only applies to Binance's 2 U.S. holding companies, not to the non-U.S. regulated international exchange. The order would apply to dozens of accounts held at the Axos Bank, the defunct Silvergate Bank, Prime Trust, and other institutions. 2 foreign entities, also controlled by ZIL, Sigma Chain, and Merit Peak, served as conduits for billions of dollars of customer money that was improperly commingled with Binance's funds, the SEC alleged. The SEC filed suit against Binance and ZIL on Monday, alleging on 13 separate counts that the exchange and ZIL had worked to defraud investors, improperly commingling funds, and operate as an unregistered broker, dealer, and clearinghouse. The emergency restraining order was necessary, the regulator argued, to, quote, prevent the dissipation of available assets for any judgment, given the defendant's years of violative conduct, disregard for the laws of the United States. The order also compels Binance's founder, Changpeng Zhao, to, quote, show cause why a preliminary injunction, end quote, against Zhao and his 2 holding companies, quote, should not be entered, end quote. The restraining order would also prevent all 3 entities from destroying evidence. So it begins. And it is clear to me, I think at this point, that Western culture in general, specifically, you know, let's just go with the NATO-bound countries, right? I mean, essentially is what we're talking about here, because we're going to get into this, but we're talking about the United States, we're talking about Canada, we're going to be probably talking about, you know, Australia, the UK, Germany, all of these countries are going to come out directly attacking cryptocurrency because it does, at the end of the day, like we've talked about in previous shows, threaten the current power structures at hand. So this really doesn't have anything to do with buy Bitcoin or buy cryptocurrency to get rich. This has to do with what is the power structure that is being shifted here. And that power structure that's being shifted is going, you know, from the current reserve currency and the current standard of the US dollar into, you know, Bitcoin, cryptocurrency in general. And if that does happen, that weakens the power structure. So this makes sense that that we would start with basically utilizing current regulation that's put in place to go ahead and move over there. But the problem is, I think in general, just if you had to take my 2 cents, is we don't need the centralized exchanges for any of that, right? In fact, the regulation of centralized exchanges like Binance, like Crypto.com, like Coinbase, and all of that stuff, these onboarding and offboarding ramps from fiat into cryptocurrency shutting down, will at the end of the day only strengthen, I think, the power of cryptocurrency in general, because right now these entities do, to a certain extent, like we've seen, you know, with a lot of different cryptocurrency platforms, manipulate those. And I think that is bad for the general public. It's just kind of a weird, it's a double-edged sword, right? Where you could say, well, you know, the people that are participating within cryptocurrency, the, you know, I think like that 1% that's really into it, really into self-custody, all that sort of stuff. We see these sort of reports, and it's like, well, duh. I mean, this is everything that we've known from the very get-go, right? We've known about the centralized exchanges commingling of funds. We've known about the manipulation that they participate within, etc. So it's of no surprise. But, you know, at the same time, we've heard accusations surrounding where does the U.S. government sell its cryptocurrency, right? When they are getting rid of like the Mt. Gox confiscated cryptocurrency, etc. It's on these centralized exchanges. So it's all kind of weird and funky, but major Australian bank to block some payments to crypto exchanges. The Commonwealth Bank of Australia, CBA for short, has announced that it will limit payments to some cryptocurrency exchanges that are considered high risk by the bank. The decision was made to protect customers from potential fraud and scams, as well as to comply with anti-money laundering and counterterrorism finance regulations. All of the same, like, FUD that has been thrown around surrounding cryptocurrency, utilizing to avoid taxes, money laundering, funding terrorism, funding drugs. Like, these are all the things that are going to be brought to the forefront and used as the reason for these types of actions across the board, right? So expect it. This is nothing new. According to a statement on the CBA website, the bank will use a risk-based approach to identify crypto exchanges that pose a higher level of risk to customers and the bank. The bank will then apply lower daily limits on how much customers can send to these exchanges using their CBA cards or accounts. The bank did not specify which exchanges will be affected by the new policy. The CBA said that it supports innovation and new technologies in the financial in the financial sector, but it also has responsibility to prevent financial crime and safeguard customer funds. The bank added that it will continue to monitor the crypto market and review its position as the industry evolves. Here's my problem. This is the exact thing that I don't want my bank doing, which is telling me what I can do with my money. If I want to make the mistake of participating within a high risk asset class with all of my money that's in my bank account, I want to have the ability to do that, right? So it's kind of this weird thing. It's like under the guise of, well, we're going to protect you by telling you what you can and cannot do with your own money. The entire point of crypto is to put the financial freedom back into the hands of the individual and stop banks and financial institutions from telling us what we can do with our money. And so it's kind of funny that it's like, this is where we sit with it, where it's like, oh, well, you're doing exactly what we're trying to move away from as a society, right? It's ridiculous. The CBA is not the first Australian bank to impose restrictions on crypto transactions. Earlier this year, the National Australia Bank, NAB, and Westpac also announced similar measures to limit payments to some crypto platforms. The bank cited increasing regulatory scrutiny and customer protection concerns as the main reasons for their actions, of which, of course, will be standard, right? It's not surprising that Australia is jumping on board with all of this as well. And restrictions, across the board. I think in the US, most of this stuff has been, let's be honest, this has been par for the course since the beginning of cryptocurrency. It's always been difficult to onboard, right? Direct bank transfers are blocked by a majority of financial institutions, right? The amount of limits placed on cryptocurrency is absolutely insane. Even if you're within a cryptocurrency exchange, let's say like Coinbase or crypto.com, there are crazy limits that are put on your ability to withdraw from those. That's why when you talk to people about making bulk purchases of cryptocurrency miners, for example, you're more than likely going to be requested to do some sort of Bitcoin payment. Because if you try to offboard your Bitcoin into like Coinbase, for example, and then make a purchase, you're going to have like a daily limit of something stupid low, like $2,500, which is crazy if you really think about it across the board. These limits are put on your bank accounts. Even if you have like 10 times the amount that's in there, they block you. It's put on all of your card accounts. And the only way around this, which is funny, is going to be Bitcoin. But then at the same time, now they're just proving everybody correct in the fact that they start restricting you more and more and more and more. And that's going to drive people away from the traditional financial institutions even more, which is kind of funny. It's like the more you separate from, fiat from cryptocurrency, fiat from Bitcoin, the more I think you're going to drive individuals one way or the other, right? And it'll be, once we get into CBDCs, it's going to get even more interesting with the amount of restrictions they're put into place, right? Crypto.com is to suspend U.S. institutional exchange now. The decision was made in light of the limited demand among U.S. institutions because of the current market landscape. Crypto.com said Friday that it will shut down its institutional exchange service for U.S. customers in less than 2 weeks, saying demand is drying up. In a statement provided to Blockworks, Crypto.com explained that there is a lack of demand due to the market landscape in the U.S., no doubt a reference to the lawsuits against fellow exchanges Binance and Coinbase. Quote, we recently made a business decision to suspend the institutional offering of Crypto.com exchange in the U.S. as of 11:59 East EDT, June 21st, 2023, due to limited demand from institutions in the U.S. in the current market landscape. Impacted institutional users were given advance notice to support a smooth transition, end quote, the statement said. Crypto.com has also stressed that this closure does not affect its retail trading app, which includes its CFTC-regulated crypto derivatives product, Up-Down Options. The Singapore-based crypto exchange added that it could reopen the institutional trading platform in the future, though it declined to provide more details on what conditions would need to be met to open its doors again. Crypto.com started the month of June with a win, announcing that it had received a license for digital payment token services in Singapore, allowing the exchange to offer its services to the country. Blockworks previously reported that the head of product for Crypto.com, Abi Basaria, believes that AI will be game-changing for crypto exchanges. I mean, that's another thing that I've been getting into here recently, which obviously I need to do some videos on, but there's a ton of AI predictors for cryptocurrency pricing, which is quite interesting and something you should probably take a look at, I think, in the near future. Definitely something that was brought to my attention by chat, so thank you guys for that. I've been doing some research on that. I do want to do a video. It's at least, at the very least, pretty fun. As far as Crypto.com shutting down institutional investing goes, from my personal perspective, cool. Get institutional investing out. I've always been, pretty anti-institutional investing when it comes to cryptocurrency. So it's not something that I realize for the price, right? It's bad. But there's already not as much interest. So waning interest from the institutional perspective just seems like a good idea from the get-go. If we go back to the principles, really what we're trying to do is empower the individuals. So, we don't need these archaic systems put into place where, all they're really doing is writing contracts on top of like the blockchain and being like, here you go, we're going to do this and that and do all these other manipulation tactics and blah, blah, blah that we've done in the past with everything else. And nothing changes here other than like you shift back to what I would say was the original intent for cryptocurrency in the first place. It is odd that Crypto.com has not suffered the same suits that Binance as well as Coinbase has, especially considering the fact that the offboarding process or the sell-off process for the confiscated Bitcoin from Mt. Gox was through Coinbase and not through Crypto.com. How they're skating regulation when it's very clear that they've sold, Crypto.com has their own earn program just like Binance and Coinbase has, right? So the service isn't any different. I would expect Crypto.com to have some sort of filing from the SEC or some sort of warning at the very least for similar securities law violations, right? I don't know what you guys think. Let me know in the comment section in the live chat. I would foresee Crypto.com getting that from the SEC as well. That's all. What this has sparked is some good news for Bitcoin maximalists, as Bitcoin dominance surges, accounting for nearly half of the 1 trillion crypto market amid altcoin sell-off. Bitcoin's dominance rate neared the 50% mark early Saturday as altcoin crash triggered a flight to safety. Bitcoin's dominance rate or share in the total crypto market capitalization rose early Saturday, nearing the 50% mark for the first time since April of 2021, according to data tracked by charting platform TradingView. The uptick came as alternative cryptocurrencies like Sol, Matic, Doge, and ADA, Cardano, suffered double-digit losses amid rumors of a $2 billion portfolio dump by a proprietary trading firm. Meanwhile, Bitcoin lost just 3%. The relative outperformance perhaps stemmed from increased haven demand, investors moving money out of altcoins and into Bitcoin, the world's largest and most liquid cryptocurrency. Quote, Bitcoin's relative dominance mooning amid altcoin market sell-off. Flight to majors, first stage before crashes occur. Pseudonymous crypto trader and analyst 52 KS tweeted, Bitcoin's dominance rate has been steadily rising since November and surged during the March U.S. banking crisis. The indicator now looks to be breaking out of this 3-year oscillation pattern, a sign of continued Bitcoin outperformance in months ahead, according to Decentral Park Capital's Lewis Harland. Tether, the world's largest dollar-pegged stablecoin, also likely benefited from Saturday's risk aversion. Its dominance rate jumped from 5% to 7.82%, the highest since January 8th, TradingView data showed. Now, it's obvious why this is happening to a certain extent, right? There's clearer regulations surrounding Bitcoin as far as the perspective that the SEC has put out. So if people are looking at protecting their funds and their availability of the funds, it is definitely a better bet to be into Bitcoin than it is into some sort of other cryptocurrency, even Ethereum. Now, I have seen a lot of people say that they are staying within Ethereum, etc., that sort of thing, and Twitter polls show that and whatnot. But the actual dominance charts and what's going on here seems to tell a different story. It's very difficult on crypto Twitter to go through all of this. You know, you log in on a day like today, for example, and everybody's like, buy my shitcoin because it's better than all the other shitcoins. But in reality, all they're really doing is utilizing you for exit liquidity. So be extremely careful when you're browsing those types of things, in my humble opinion. That's across the board. Not to say that it's a bad time to purchase, you know, that's going to be up to you, not financial advice. Tune in with your intuition and pay attention to the markets and do as much research as you can. Let's talk about a unique issue within cryptocurrency mining that has been, you know, something I've talked about in the past and is definitely coming to a head. I think a lot of this has to do with the poor quality of miners that were coming out from Bitmain on the S19J Pros. Few of the XPs. Sorry, the S19 XPs seem to be breaking quite frequently. I think we're starting to see these really, as we hit this summer, start to hit the broken lines. Either way, Hut 8 says repairs to damaged crypto mining equipment are taking longer than expected, and the delays are impairing the miners' hash rate and Bitcoin production. It's only going to get worse with the summer, right? Heat causes more damage, right? I mean, that's just the way this works. Hut 8 Mining said repairs to damaged equipment at its Drumheller, Alberta site are taking longer than expected because of power shortages and equipment failures. Quote, progress is bringing the equipment back online has been slower than expected given frequent curtailments and hardware failures due to power surges, end quote, the Toronto-based company said on Friday. As individual miner hashboards are repaired and reinstalled, other hashboards are failing and require repair, which is impairing our hash rate and production. The company, which is in the process of merging with US Bitcoin Corp, said last month that the site was running at 15% of its installed hash rate, with a restoration expected in 10 to 12 weeks. That timeline won't be met, the crypto miner said, without giving a new estimate. The problems were first reported in March, which we had talked about. So if you look at this from the perspective of where the opportunities lie, there are definitely a lot of opportunities within the cryptocurrency Bitcoin mining repair side of things. And if you guys are looking for repair sources and all of that, let me know. You can email me at inquiry@sonofatech.com. I do have quite a few different repair facilities, companies that I have connections with that I can get you in contact with if you're somebody that's trying to get repairs out. The other note to this is like, if you're looking at purchasing Bitcoin miners right now, I mean, I think the sweet spot was a little bit before it was very clear that the XPs were gonna do this. So, if you're, I think when you could get the machines that were being replaced by the XPs, was probably the best bang for your buck. I think the demand for those are going to go up, especially with the new Epic hash boards that are allowing individual chip tuning and overclocking, the removal of the developer fees as well. There's a lot going on here on the older systems that are getting more support for more overclocking options, less developer fee options, all this sort of stuff. That looks like there's going to be a little bit more of almost a rollback from newer miners to a little bit older miners. I mean, it's even to the point to where, we've seen like 100 terahash models. I think some guys that are doing these overclocking competition. I don't even know if they're competitions, but you can go browse on Twitter. There's some incredible stuff, like people hitting like 180 terahash on like a S19 100 terahash model. It's crazy. So I think there's a lot more performance out of those. Plus, on top of that, the design changes that Bitmain made were a little rough. There's the aspect, or the whole other aspect of competition from WhatsMiner as well, like the M50s. So pay attention. The ASIC market's definitely turning into, thanks to the amount of equipment, the amount of support that's coming online, the ASIC market's becoming a lot more fun from a GPU miner perspective, right? And the tinkerers, right? The GPU miners, like, we're the tinkers. We like to play with stuff. We like to overclock. We like to underclock. We like to tune. And now a lot of that ability is moving into the ASIC market. And it's at a price where you can play with it now, where we're talking about being able to buy competitive miners, throw in like a control board that allows you to tinker with it and tweak things, and you can really get yourself in a spot where you start to kind of take those skills you learned from the GPU and move them over into the ASIC and have fun, and it's affordable. So it's something that I'm having a lot of fun with lately. Probably going to see some more content surrounding that over on the YouTube channel, but it doesn't mean I'm not still interested in GPUs. And we have a new GPU here coming from Intel. The Arc Pro A60 12 gigabyte, 130 watt single width GPU has released. And this is going to get really interesting when we start talking about the move into proof of useful work, right? Intel has recently unveiled its latest GPU offering, the Arc Pro A60, which is part of the newish Intel Arc Pro GPU series. The new GPU is specifically designed to cater to the professional market and for OEMs to integrate into workstation desktops. The Intel Arc Pro A60 GPU is built on the Xe-HPG architecture, which incorporates features like hardware-accelerated ray tracing, AI-driven super sampling, and variable rate shading. Now, in terms of specs, the GPU has 12 gigabytes on board of GDDR6 memory. ECC is not noted in the specs. Now, we do get a 192-bit design for a total of 384 gigabytes per second of memory bandwidth. That's going to be slower than, say, like the A770 or even the A750, which are at 512 gigabytes per second, but you are getting a single slot GPU here with a pretty decent bandwidth. The new GPU depends on the price, of course. The new GPU has 256 execution units, 16 Xe cores with 4 render slices, 16 ray tracing units, and supports Intel XMX for AI interface. Display out ports are 4 DisplayPort 2.0 ports. The card also supports H.264, H.265, and AV1 encoding and decoding, which has been a big deal, of course. One of the reasons a lot of people will or have been interested in these ARC GPUs is the AV1 encoding and decoding on a discrete GPU. So in terms of ISV certification, it's got Autodesk in there, Bentley, Dassault Systems, Nemetz, Czech, PTC, and Siemens. It seems like this is probably not yet to be the level of what we typically see on the NVIDIA and AMD Pro lines. Workstation vendors also focus on ISV certification. Still, at least this is a program that Intel's working on with its Arc Pro Series cards. And so there you go. I think that here's the part from the mining perspective that gets weird is like I said, A750 has more bandwidth on the memory side of things, but it is going to be a dual slot card at the very least. And we are moving into a completely different infrastructure for GPU mining. Most of the coins that or cryptos that appear to be sticking around and not going anywhere appear to be moving along this trend of proof of useful work. Now, proof of useful work will mean different build outs for your GPU mining, and it does mean that you are going to need more expensive cases, server cases, as opposed to these octos that you see behind me. You're going to need basically larger CPUs that support more PCIe lanes. It usually means that you will probably also be seeing a lower amount of GPUs per rig, a more expensive infrastructure. But what that will also allow you to do is leverage your mining farm as a data center for AI processing, machine learning, and potentially give you a different mode as a GPU miner to actually earn something with your data center. Whereas now in the bear market, if you're built out like a traditional mining farm, you don't have that capability of shifting into, the data center processing side of things, shifting into all of that. But now the big problem here, of course, is going to be your internet connection. It's not going to be like it was before where you're fine on like a home internet connection, or even like for a long time, you could utilize hotspots for mining Ethereum, right? Not going to be the case here. There's going to be a lot of changes that come into play here. But we have a really interesting announcement from Flux and Octominer. Flux is fully dedicated to the ethos of decentralization, and it will always be a proof-of-work blockchain committed to building the best ecosystem for the GPU mining community. We have Flux and Octominer here. Why is this important? Well, Flux is building a large-scale infrastructure for Web3, AI, and storage, a prerequisite for technological progress and for the internet to evolve. To succeed, Web3 has been truly decentralized, has to be, right? Otherwise, it will fail to deliver on the promises of transferring ownership back to the users from the big tech stewards with immense power over the current internet. This is why the Flux blockchain is fully committed to proof of work consensus model. There will never be a true Web3 without proof of work. GPU miners put their hardware to work to secure the Flux network, and they are essential to the continued operation and decentralization of Flux. In return, they earn block rewards to fund their operations. It's a symbiotic relationship where the Flux blockchain and miners depend on each other to provide a fruitful and mutually beneficial partnership. To provide an attractive ecosystem to the miners, Flux is dedicated to building new technology to make mining more attractive while expanding the incentivization model for miners. Previously, Flux introduced parallel mining to increase the rewards miners earned and added bonus earnings to mined blocks that contain Titan nodes claiming transactions. Now, Flux is working on a much more fundamental change for Flux mining that will bring new opportunities for miners. In Q3 of 2023, Flux will launch the proof of concept for proof of useful work. We're like almost there. We're almost there. We're going to get to see what this looks like. I don't even know. I'm not ready. Are you? I'm not ready. I don't have the money to do this. I don't have the equipment to do this. But I'm excited. Right. This will enable miners to make their rigs available for on-demand work for compute-intensive tasks such as AI, deepfake detection, rendering, etc. Proof of useful work creates a new revenue stream for miners as they can automatically switch between mining and doing on-demand proof of useful work tasks to optimize profitability. Any miner will always be focused on optimizing the efficiency and profitability of the mining rigs. The good note here, as I read it, at least as I understand this, is that it sounds like your old rigs can still mine the blockchain. You just won't get the incentives for the proof of useful work side of things initially, right? So that's kind of what it sounds like to me. We'll read on a little bit more, but to collaborate with the mining industry to find optimal builds for proof of useful work, Flux is thrilled to announce a partnership with the premier mining hardware designer and manufacturer, Octominer. Octominer is a supplier for mining-focused hardware founded in 2017 by a group of cryptocurrency mining and computer hardware enthusiasts. They strive to design and manufacture mining rigs that reduce downtime and labor costs and increase efficiency, providing clients with more innovative and reliable mining hardware that increases profitability and shortens ROI times. You can find more out on Octominer product and services on their website. You can also find the latest news and updates on their Twitter. Now, here's what these are looking. These are basically servers. I mean, at the end of the day, what we are seeing is going to be like AI rendering servers. So it won't necessarily be. Here's where things get weird. For the uninitiated to the channel, my background is specifically in this type of in this realm. Okay. And if you're running a data center, which is basically what we're turning this shit into is a data center, okay? There becomes a lot more. There becomes a lot higher standard, let's say, for building out infrastructure for a data center than building out for even a GPU mining farm, right? From redundancy to from power redundancy to VM redundancy, machine redundancy, from internet infrastructure, like all of this stuff that's going to be needed, like you're going from something that is reasonably attainable, I think, on a home level, to requiring not only a lot more money, but a lot more expertise. And then if we look at like something like Octominer, like this is a cool partnership. However, if I look at like this, and we'll look at the pricing, see if they announce the pricing, my mind immediately goes to, well, why am I just not buying VDI servers and repurposing them or something along those lines, right? Why am I not going with someone like Dell or HP that has 4-hour SLA, where if I have a rig go down, I go, hey, get your ass over here and fix my shit within 4 hours because I need to make money, right? As opposed to basically what this is a white box server that has no support and their support's way off in like China, and you're not going to get that uptime. So the price in this case has to be a lot lower for it to make any sense whatsoever. Okay. And that's really where, if, how do I explain? I mean, I'm been a infrastructure guy for many years, over a decade now. If it was a white box, if I went in to do like, talk to people about redoing their infrastructure and they were like, well, we can save money with like super micro, like white box servers, I'd be like, then I'm not doing the work for you, right? You need to buy HP, you need to buy Dell, you need to take this shit seriously, or I'm not going to take it seriously, right? And you pay that premium for a reason. So once again, this is just, we're completely changing. The game is completely changing now. And the upstart cost to all of this in general is going to be insane. So I don't like, it's really cool, but the barrier to entry goes above that of an ASIC now at this point, right? The barrier to entry here goes to way above what even an ASIC mining is, right? So we're going from GPU mining being accessible to being inaccessible for a majority of people, if we're talking about moving into proof of useful work. Design and sell ready-made proof of useful work servers with high-quality hardware compatible and optimized for Flux proof of useful work. Here are some specs. You got 10 GPU HPC server. That's high-powered computing server, right? You got 10 PCIe Gen 3 by 8 links, so they're not going Gen 4 here. They're going Gen 3. This does mean if you're going to build your own box, technically, Threadripper, Epic, these things are going to be, or Gen 1 Threadripper still going to be fine here. 4.5U server lid, including an account to account for taller GPU dimensions. 19-inch server form factor. You'll get 2 Xeon E5 2698s, and that's going to be 32 cores total. 256 gigs of RAM. I mean, there's just no fucking way this is affordable. And then is it even worth it? Like at this point, why aren't you just building out an AI data center, going with HP or Dell servers, and like with, proper remote management, ILOs, or ILO for HP, iDRAC for Dell, proper response times on repair, because that's what this is. This is a high-powered computing server that's going to cost, frankly, a shit ton of money, because there's no way it doesn't cost a shit ton of money. I mean, these are really cool. You got 2 terabyte M.2 SSD, 10 3.5-inch hot swappable. It's a fucking server. And a 3-year warranty upgrade. And you can get 10 Octo server RTX 4090 AI dual slot GPUs, I guess, is what it can fit. More news will be at Mining Disrupt in July. I don't know. What do you guys think? Like, what does the price point here have to be to make this? Why did autofocus quit? Let's bring it back. We fixed autofocus with a hand. what does the price point on this have to be to make you go to this instead of something else? No, it won't be workstation, Patrick, because it'll have to, well, it's going to run more. I mean, this is like, then you'll find comparable, right? So if we did, we're talking about just enterprise AI at this point, right? And these servers are going to be expensive as all hell, dude. They're just going to be expensive, dude. I mean, there's ways that we can get into it being less expensive, which we can talk about, but even less expensive is still going to be expensive. Just makes me think. All right. So let's go ahead and I'll refocus here. My mind is just going like about proof of useful work, you know, what the options truly are, what that's going to look like, and then how do I get the fucking capital to do it? That's where how do I get the fucking capital, bro? Because that's just yeah. Whew. That's what's happening. No, EC, like, error correcting RAM is all you need. Yeah. Anyways, Osprey has a new firmware update. It's implementing the new Team Red Miner. The reason for this is that Team Red Miner is updated to add Ironfish. And so your Ospreys are not dead in the water. Neither are any of your FPGAs that you may have gotten from like Coastal Crypto or whatever. We now have new bit streams that are going to allow you to mine, you know, essentially Ironfish. I wish that this would have included Alephium, but unfortunately it did not. And so the newest firmware is out, and they're thrilled to announce that the latest firmware update incorporates a highly anticipated Ironfish bitstream developed by Team Red Miner. This integration brings forth the exceptional mining capabilities of Ironfish to the E100 and E300 devices with carefully optimized VCC int and core clock settings and specifically designed for Ironfish. Users can now harness and enhance performance and efficiency. And here's some of the numbers. So it looks like you can get like crazy efficiency down here. The lower, like 600 millivolts, 134 gigahash a second at like, which puts it at like what? 664 megahash per watt. If we wanted to run that up, right? So we can go to coins. We'll hit Ironfish here. We'll correct to 13. Whatever. We'll go to the calculator. We gotta do just to make sure gigahash to mega hash. Pop this open. We're at 134.89 gigahash. We get a lot of mega hash, 134,000. I mean, obviously at this point, Ironfish versus FPGA dead in the water, but how many watts are we looking at here? 203 watts. And what is the miner fee on this now for? Did they list miner fee? I assume 10%. The release of Team Red Miner. Is it 10% again? Or do you guys know where it's listed? Here we go. GPU algorithm, ETH Ironfish, 10%. Okay. 10% on the miner fee. Calculate that out. At 13 cents a kilowatt hour, that's $1.24 a day. Obviously not fantastic, but for an E300, but that's better than, better than nothing. Seems like you're probably going to still be better off in the short term on kaspa, but I haven't looked at it in just in a hot minute. So this is early numbers. You're doing 1.56 iron per day on basically the most efficient setting on the, is this on the E300? Yeah, that's the E300 before dev fee or whatever. So which we added the dev fee onto there, so there is that. So yeah, that coincides, of course, with the announcement. So if you have, any of your other FPGAs that are supported by Team Red Miner, version 0.10.13 has added support for Ironfish on the FPGAs, and so you can go ahead and get that going. There is an FPGA Ironfish guide that you can check out. The other minor release for the week was Rigel 1.5.2, which added a bug fix for Zilica and a bug fix for Nexa. Nothing huge as far as that's concerned. On hashrate.no, we're seeing Pepe Pew or Pepe W still topping the charts, but not extremely profitable. It's still topping the charts. On the AMD side of things, though, Novo has really come up. I mean, it's really just a fight for the shit coins at this point. Nothing crazy going on as far as profitability within the GPU mining market. I think the everything's pretty much at 13 cents a kilowatt hour, not profitable, right? Or barely profitable. So there you go. Taking a look at ASIC mining profitability, the KS3, which is supposed to come in August, is, sitting at the top. Obviously, the KS2, come down a little bit, doing 483 per day. I've got no confirmations on anybody receiving any of their Ice River miners yet, but let me know if you've received yours and how it's performing. And then from there, the Antminer L7 is still, plugging away at that Doge and Litecoin merge mining. So definitely still sitting up there nice and pretty. Scrolling down from there, though, it gets worse and worse. Let's take a look at the S19 Pro. 110 terahash is unprofitable right now on Bitcoin, I believe. Yep. It's profitable on NiceHash Marketplace, but that's about it. So there you go. Mining profitability out of the way. Let's get into questions and answers. Remember, super chats are never required. Always appreciated first to be answered because they're the easiest to read. Tagging @SonOfATech will highlight the message orange, and I'll be able to read it easier. So let's get into this. Patrick says, I appreciate that you're echoing what I said several months ago about the shift in both paradigm and equipment. I think, I mean, like the big deal here, I think for GPU mining is like GPU mining was supposed to be that thing that everybody could get into. And really, when we move into proof of useful work, that's just not the case, right? And you will need teams to manage these types of things. I mean, you're basically turning into an IT firm at that point, right? And is the juice worth the squeeze, I suppose, at the end of the day? I mean, Hut 8's already so far ahead of the game as far as that's concerned, right? Hive as well. Ball Life Gamer says, that's not a text, so we just use a B550 or 450 Mobo and split lanes 2x8 and run 2 GPUs per motherboard? I mean, yeah, but like what's the, you know, well, and it depends, right? So if because the way Flux is actually functioning, to be completely frank with you, like there's going to be different types of proof of useful work, right? If their rendering loads are going to be like rent an AI renderer and also take, get some, a certain amount of CPU usage and get a certain amount of data and all that, that's all going to need to come to the same system. And like, then we get into bandwidth too. You're going to need redundant internet connections. You're going to need, I mean, it's just, it's a lot. Shio says, that's have a deck. Simply buy Ryzen 9 with 3 PCIe to reuse the GPUs you already have. I think Gen 1 Threadripper makes more sense because you get 64 PCIe lanes. That's my 2 cents, but those boards are going to go away real quick. I'm not going to buy a 7950X for more than I could buy a Threadripper 1950X that has more PCIe lanes. Dead Pigeon says, that's not attack. What is your fiat on-ramp method of choice now the exchanges are poop? Well, I don't, it's power bill. It always has been. I mean, like, it's not rocket science, right? Yeah, on Gen 1 Threadripper, you can get a 1900X for like 65 fucking dollars. You can get a motherboard used for $300 to $400. It supports error correcting RAM with quad channel 8 slots. So, and it's got 64 lanes of PCIe 3. And you white box server it. And then that allows you to also continue to kind of work on your airflow and stuff. Shah says, come to Romania, 1 gigabit per second internet is €10 per month until you're a business. Until you're a business. And until you need that dedicated, right? I mean, it's the same in the US. You got, so for example, you can do like AT&T gigabit for $50. As soon as you go redundant business, $1,400 a month. Dedicated redundant business. And if we're being honest, we're not talking we're not talking about that being an insignificant factor. Like, that's going to be a big factor when you're processing these big jobs. I mean, if you drop off processing one of these jobs, like, I'm sure there's going to be some sort of blacklist that happens here too, right? Like, let's say your miner drops jobs a lot. My assumption will be that you'll be blacklisted, right? So, or you just won't get, you just won't get jobs. And then you spent all that money on equipment when in reality, you can't compete with the internet connection. And then what are you doing? I mean, these are types of rigs, quite honestly, that you build and you co-locate. And you let the uptime worry be from the co-location. If you're an individual, that's the easiest way to get 24/7 support for like a white box server. Right? Decentralized AI, I'm sure there will be, if you need real-time rendering, for example, and your node is not handling that real-time work, it's not going to give you that work again. I assume that has to be changed. Yeah, Colo is going to have to be money, Paul. Like, all of this is going to have to push up the incentives to mine proof of useful work are going to have to be a lot higher. And Ricardo brings up a good point too. And if the more profitable coin is not proof of useful work, you wasted all that money on equipment. I mean, yeah, you're changing your business model. You are no longer a GPU miner or a cryptocurrency miner. You are now a data center, right? I mean, that's what it is at the end of the day. The normal home miner is fucked. There is no GPU miner anymore, right? And I know I said the F word a lot today, but like, it's true. Like, it's done. I don't know what you mean, videos on power bills, Alice. No, I don't know. I don't know what you mean by that. Shio says, outside of tech, since this transforming to data centers, from your experience, how often do stuff break in data centers? I mean, that's the point. Like, if I was, let's say I got into purely building out the data center and hosting y'all's rigs, I'm going to force you to buy Dell or HP. I'm going to force you to buy 4-hour SLA. I'm going to force you to pay for redundant internet connection. And I'm going to force you to pay for redundant power, right? That's just it. And all of that's going to add up. If you were to do it yourself and do like, a white box, it's probably going to be down all the time. I mean, or at least a lot more, right? I don't know. Like, if you are running, data center equipment in a proper data center with proper cooling, the systems are going to run fine. But the expense of that is much higher. Well, Patrick says you would do it for AI. Well, yeah, you would do it for AI. That's what I'm saying. You would, but you're shifting. We're no longer mining cryptocurrency with GPUs at this point. I guess is my point, Patrick, right? Which I think we're on the same page with. But then here's the other deal. With all of the regulation coming into place, etc., like, why even bother with, if you're going to build out that kind of equipment for processing that kind of jobs, you are probably going to make more money by cutting deals with individual companies that need processing done. You will have less regulation and do better than futzing with one that's tied to a cryptocurrency. More than likely. Yeah, if I think about it objectively, like if you got that kind of equipment, you are going to be able to rent out that compute power to a large company and cut a processing deal with them that is going to make you way more money. And at that point, just get out of, like, it's just, yeah. Still so much hash rate on GPU only coins? Not really. I mean, we lost a lot of hash rate after ETH Tech. But yeah, we did. I mean, we did. You think, Patrick, you say crypto regulation getting strict, doing useful work is just data processing and very safe? Yeah, but not tying that to a cryptocurrency, right? As soon as you tie that to Flux, and you're also processing that, basically you're just adding more taxes to yourself. I'll just have to see how it plays out. Nerd says he's just going to keep CPU mining and waiting on GPUs to be profitable again. All right. My son wants to get back into Diablo, so I'm going to stop for today. I'm going to hop over to playing Diablo 4. Oh, it's couch co-op, by the way, on the consoles, which is really cool. Thanks, everybody, for watching. Be sure to hit the like, comment, subscribe, and notification bell down below. I will be contemplating and figuring out how this works out in my head. We'll have to see as we get closer and closer to more proof of useful work before we make any final decisions. But getting out of the U.S. for crypto mining may not be a bad idea, Alice. I'll see you guys next Tuesday.